Welcome back. Thousands of American troops in Afghanistan will be coming home starting by the end of this year. President Obama made the announcement on those details last night.
By the end of this year. And we will bring home a total of 33,000 troops by next summer, fully recovering the surge I announced at West Point.
And when they do come home, thousands will be looking for work in an economy where jobs are scarce. A group of Wall Street firms is talking about that today aboard the USS Intrepid here in New York. Suzanne O'Halloran is there, and she joins us now with the CEO of Deutsche Bank North American. Suzanne?
Thanks, Mark. I am here with Seth Waugh. He is involved in some of the discussions for the industry. Seth, welcome to the program. Thanks for giving us some time today. Wall Street could be doing a better job in terms of hiring veterans. What are some of the discussions? What's going to improve going forward?
Well, I think we've improved a lot, hopefully, already. I know we've hired hundreds of folks in the last year or so since we began to focus on it, and it was really a call to arms that one of our veterans heard from a speech that General Abazad gave, and talking about the biggest issue facing, to a certain degree, was veterans coming home and not having opportunities. So we decided to model something after Women on Wall Street, which is something we've done for a long time, which is a networking program which creates jobs and really tries to educate both in terms of the veterans and educate them about Wall Street and Wall Street about them. And you know, purely selfishly, by the way, this has turned out to be a terrific thing. I mean, it's a wonderful, underserved talent base that has a lot of the qualities we want in terms of discipline and loyalty and teamwork and
right.
sorts of things.
Just yesterday, Ben Bernanke said he's frustrated with high unemployment. We had jobless claims rise today. We had the stock market down. Trading volumes are down. So the question is, can the industry really hire anybody? There's talk that a lot of firms may have to lay off because of the environment. What's your take?
Look, we're always up and down, right? And I would say that we're in a sort of a flat mode, but doesn't mean there aren't opportunities and changes going on. And certainly, we try to make every day seems to be the most important day of our lives in terms of the news that comes out. And we saw a bit of that, yesterday, and certainly the reaction today. But look, we're a long way away from where we thought we'd be 2 or 3 years ago. We have a long-term view that the economy is going to be okay, and markets are going to be okay in the U.S. We're better than we could have imagined. Certainly mixed signals going on around the world. Lots of economies are doing extremely well. U.S. is underperforming right now, but we're sort of positive on the second half. We do see some gains in employment that are happening out there, and obviously there's parts of the world that continue to struggle.
So you mentioned around the world, Deutsche Bank, your parent, is a German bank. There's a lot of stuff happening in the EU. How are you positioning the firm here in the U.S. for that, and what kind of changes may we see because of the European crisis?
Well, I think the European crisis has been something that's been happening for a long time. It's not necessarily new news. It's the same version, and I think that they will ultimately resolve it. There's certainly people a lot closer to I that are working on it right now, and I think you'll get a near-term solution and ultimately a long-term solution to work it out. There's parts of Europe they're doing particularly very, very well, including Germany, which is really having a terrific run here. From a U.S. perspective, we've done better in the last couple of years than we've ever done from a Deutsche Bank perspective. We've picked up market share, client share, kind of came through the crisis in a very solid position. And we're going to continue to grow here and in other places of the world. We, like everyone else, are also very focused on the emerging markets. We do think that's the next real big engine for the world. So Asia, Latin America, other parts of the world where we think there's going to be huge growth. So we are, in our view, the most global bank in the world, in more countries and more local in more places, and we'll continue to have that as our strategy.
Right. Well, I have here, I'd be remiss if I didn't ask you about Basel III. The committee's meeting today. Is 3.5% an appropriate capital level for banks?
Well, it'll work out. I mean, it's obviously there's going to be something to argue about where it is now. We'll see. There is the risk that if they take it too far, you'll have the opposite effect, which is what the industry is worried about, and certainly people are.
Would be.
We think that's a little excessive, but we're as long as there's time to get there, or runway to get there, we'll all get there, and we've. The street has done enormous things to change where we are already in terms of doubling capital, preparing ourselves for this. We're down to the last sort of details on it, and we hope it doesn't go too far and you create unintended consequences. And we'll certainly try to have a seat at the table to try and make sure that it's the right balance. Changes need to happen. Certainly the industry had some issues, could have done things a lot better, made some mistakes. and we want to never have that happen again as an industry. But we also want to make sure that we continue to grow economies in the way that they should and have enough liquidity to do that.
Okay, great. Well, Seth, we're out of time, unfortunately, but thanks so much for your time. Mark, our thanks to Seth Waugh, the head of Deutsche Bank, the Americas, here from the Intrepid, focusing on improving hiring for veterans. Mark, back to you.
Suzanne O'Halloran and Mr. Waugh, thank you both so much.